Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Jeff Peterson analyzes corn and soybean markets. Bruce Johnson explains why he believes Nebraska farmland is in a bubble, and Rick Rasby talks about corn stock grazing and calving records. Over the next few weeks, you'll see our reporting from Louisiana and the Port of New Orleans. We traveled there this week with the Nebraska Soybean Board and a group of the state's soybean farmers as part of the board's See for Yourself International Marketing Program. It's designed to show producers how their soybeans are exported to international customers and how marketing affects their bottom lines. While in the state, we toured the port, an ADM facility, and a sugarcane farm using soybeans in fallow rotation. We'll show you the first part of our coverage from the port in a few minutes. But first, Jeff Peterson from Heartland Farm Partners is our marketing analyst this week. Wednesday's momentum had ended when we talked with Jeff Thursday morning. Weather conditions for the current wheat crop remain poor, especially in Nebraska. Corn continues to face tight supplies, and in beans, the beginning of a South American harvest has some wondering if there's more upside or downside here in the U.S.
You know, we're kind of at a point, and that's what the question that customers are asking us every day. We believe we have a little bit more upside, and we would go higher as long as we can see continued dry conditions in South America. But once that forecast changes, we really believe that we have the potential to see a pullback.
The conditions there are close to ideal now, yes?
Yeah, they've had, it's mixed conditions.
Right.
They've got wet conditions in the north that's actually keeping some of their soybeans from getting to the market.
And then the south is much better.
Yeah, and the south is much better. But the thing you run into, though, is as you move into Argentina, they're actually to a point in here where they're dry, and that's actually almost to the point where it's affecting yield. And if it does continue and does affect the yield some more, then that's what it would take to give us a higher move from here in beans.
The ships are coming in there, getting ready to harvest some of that crop. How open is the window now? That window we've been talking about for so many months, the window of South American beans hitting that market, how close is it?
We're right there. There's actually a few ships being loaded already. We've got a big backup down there, though. There's a lot of ships backed up. There's a lot of concern about shipments in first half February, and as a result, China has been rumored to pick up a few cargoes of beans off the P&W actually the last couple of days because they're concerned they may not get the beans out of Brazil in time.
So you see that there is maybe a little bit of growth in beans. That being said, are you recommending locking in any sort of protection below it?
Sure. On the old crop, we are. We are really considering very closely right in here making some additional sales. I think the thing we have to be prepared for is that if we're of the camp that the price is going to go higher, we're in a weather market, and we have to see weather conditions in South America stay dry in Argentina and southern Brazil.
Where are you locking in protection at?
Yeah,
range?
Yeah, we'd like it up in this, say, $14.60 to probably, $15 level. It's a wide window, but anywhere in that range, I think, is an area where some sales can be made on the old crop.
Recommendations for 2013 crop?
Yeah, we're watching that very close. We made our last round of sales above $13 on the futures. Not necessarily using the futures, you could use cash if you wanted to, but if you haven't made any bean sales in here, we're in and around the $13.30 area, I'd recommend making some sales here also.
As you look at corn, I mean, the variations are quite differing. Best case scenario weather-wise, you produce a record crop far and away. Worst case scenario brings you what?
Worst case scenario brings us rationing that's needed, and actually we could take prices higher than we went last year. And what would have to happen to have that? We'd have to have the type of conditions that we had last year in the U.S. this year.
At this point, is that basically what you're betting on? You're betting between weather and rationing?
Yeah, we're betting right now. We're watching the weather very close. We're really the opinion on this old crop, though, that We don't think there has to be a lot more rationing done, though. We really think that we're on pace to kind of hit those numbers. And a matter of fact, we're kind of the thought process that the 602 carryout that was talked about in the last report, we may actually start creeping that number a little higher there. We are worried about some of the demand sectors. We are a little worried about ethanol, and we also are a little bit worried about, what is the feed demand going forward.
Let's step back just a second. I want to step back to beans because you had mentioned something when we talked earlier about the year-over-year difference we're seeing in beans. How does it compare 2012 to where we are in 2013?
Yeah, that's something we always like to look back on. So if we roll back time, and if we're in a crop report in January of last year, we have to realize soybeans were at $11.58 back then a year ago. They did peak out at the end of April at $15.08. But in order for that to do that, we had to see the South American crop drop about 17 million metric tons. That was a big drop. Now we compare that to this year, and actually when we look at our stocks to use numbers, we're very comparable right now to where we were in April last year. So I think this bean market's pretty fairly priced right now.
Let's move ahead then to 2013 corn. It's below $6 a little bit. Where are you maybe thinking of pulling a trigger at?
We're wanting to sell in the $6 area. We already do have 20% of the crop sold, but our next level at which we're looking to advance is at the $6 level, and we think we have a good shot at getting that.
I'd like to ask you about wheat because conditions aren't good. The latest report coming out this week from NASS, 8% good in Nebraska, 0% excellent. Where do you see that market going?
I think we still have some more upside on the wheat side. It's a delicate one that we have to watch because it's balanced back against beans, but I do think we have some more upside there yet.
If there's a pullback in wheat, what does that mean?
If we have a pullback in wheat, really what it means then is that maybe we aren't as competitive out in the world market as we thought, but I don't think we're going to see much of that.
Next week, Frayne Olson from North Dakota State will join us to analyze the wheat markets. The Port of New Orleans has a distinct advantage. It's not only located on the valuable Mississippi River, but it's also the only seaport in the country where 6 Class I railroads meet. Access to Union Pacific, Burlington Northern Santa Fe, Canadian National, CSX, Kansas City Southern, and Norfolk Southern means the port can easily receive and distribute goods via rail or water. Its large imports of steel and natural rubber from Asia have fueled the growth in containerized ag goods for two-way trade. As you'll hear in our interview with Janine Moreau Mansour, there are large volumes of product moving to overseas buyers at the Port of New Orleans on the Mississippi River.
We are a multidimensional port. We handle break bulk cargo and containerized cargo. Bulk product that's handled at our facilities is relatively small compared to what's handled in our jurisdiction. So last year we handled about 200,000 tons of bulk agricultural commodities, whereas within our maritime jurisdiction, about 30 million tons of total cargo was handled, about 24 million of which was bulk commodities.
Is it a lot of different commodities? Is it corn, soy? What regions are you getting it from?
It is. It's a lot of bulk ag commodities, various commodities. Corn, Louisiana agriculture is one of our main core industries. So it's a lot of corn, it's soybeans, rice is a big one. We have the distillers' dried grains, the byproduct of ethanol. Really, it's various types.
You're becoming more specialized in cargoes, is that correct? Or containerized, I guess?
We are, yeah. We're trying to capitalize on all the bulk commodities that flow on the river. Over 60% of the nation's agriculture exports flow on the river. And so we're trying to capture some of that ag commodities that's already moving and containerizing it. There's a big opportunity for containerized ag exports.
Explain to me why that is. You were mentioning something earlier today about the ships that come from Asia. They bring steel, they might bring rubber, and they go back empty. So now this is the opportunity for containers to go back with something in them?
Exactly. There's several forces at play, actually. So for us, we have a lot of imported steel coming from Asia. That's our top import commodity overall. And going outbound, grain is in high demand in Asia because of the huge population and the demand for American agricultural products. And so they load ag products outbound. And then on the container side, we see the containerized agricultural products market is growing for a number of reasons. I've read that about 10% of the nation's exports are currently being containerized, nation's ag exports. The ships are getting larger, the containerized ships are getting larger, so shipping lines have to fill more slots on their vessel. And because of the trade imbalance, there's a lot of empty containers that end up going back to Asia. And so having those empty containers, shipping lines are turning to agricultural exports to fill those empties to go back to Asia.
You mentioned that the drought wasn't necessarily a big issue for you. Why was that?
Mainly because it was more of a major issue for ports north of us on the river. For example, north of Cairo, there was a barge draft restriction, and so shippers weren't able to load as heavy. You know, barge traffic is very important to us because cargo, like mostly steel and other products, can be discharged directly to barge, and then they go upriver on the inland waterway system. And having that barge draft restriction because of the drought, the low water, did affect us, but not nearly as much as ports that are more bulk ports.
Mainly going up the river then?
Correct, for us, yes.
I know you probably get asked this question a lot, not only here, but in different parts of the city, but when you look back to Hurricane Katrina, are you as powerful as you were before that? I mean, are there any lasting impacts that you see here?
You're right, we do get asked that a lot. And Katrina was in 2005, so we're 7 years from Katrina now, and the city really is better off now than it was prior to Katrina. We were told, you know, August 29th, 2005, after Katrina hit, that we would actually look back several years later and see that we're actually stronger because of it. And no one believed it at the time, but it's actually true. There's been a lot of investment in New Orleans post-Katrina. The population has grown. We're actually the fastest growing city, according to Forbes, in 2011. There's been a lot of investment due to the cheap natural gas in Louisiana. So on the manufacturing side, a lot of chemical companies have invested. A lot of young professionals have moved to New Orleans too, that they stayed after helping out from Katrina, and then they've invested in New Orleans, and there's a lot of entrepreneurship. And as far as the port goes, our volumes are better than they have. Our container volumes have grown rapidly since Katrina. Our export volumes as well. So it's a positive story.
We'll have more coverage from our trip next week as we hear the thoughts from Nebraska soybean farmers on the recent trip to New Orleans. While at ADM on Tuesday, we briefly discussed the delay in shipping due to a holdup on the Mississippi River. A tanker barge struck a railroad bridge Sunday, spilling thousands of gallons of oil into the water near Vicksburg, Mississippi. As of mid-Wednesday, the river remained closed for a 16-mile stretch with over 1,000 barges waiting to move north or south. The Coast Guard is continuing to clean the spill and restore normal traffic along the vital shipping route. Record high commodity prices have fueled the real estate market to historic levels, and nowhere is that more apparent than in this state. Between the middle of 2011 and the middle of 2012, the USDA says Nebraska farmland recorded a 33% increase. That's the highest increase of any state in the nation. We recently talked with Bruce Johnson about whether that means Nebraska farmland has entered a bubble that's about to burst.
History will tell us that when you get into real estate, you're going to be talking about times of boom, rapid appreciation. You're going to have some issues where bubbles are formed and eventually busts will occur, and that's been proven repeatedly over time.
Have there been those situations in the past where it's gotten scary and you know, there has been a bust and then you're a little more careful about what you do with your money going forward?
Well, yes, and many folks my age certainly can see it full cycle. The 70s were a strong income period of time, and of course we ran up land like we had never done before, only to pretty much hit a crisis in the early 80s with a variety of considerations and dropping income and ballooning interest rates and all of that. And we crashed, and we actually did see land values from 1980 to 85 drop to 40 cents on the dollar. That's huge, and that takes a toll on the whole economy of agriculture.
Currently, what are the land prices? Put in perspective for me how much they've increased over the past few years here in Nebraska.
Well, in the past 5 years, we've basically seen a doubling of agricultural land real estate in Nebraska. Unheard of. In fact, compared to the 70s run up to the crash of the 80s, it's even beyond that in terms of the buildup in just 5 years. Some of the areas of the state we've actually seen a 125% increase in roughly 5 years.
So that would be the boom. Then does it create?
That's the boom.
The
yes.
question is, then is it a bubble?
Well, when you look at a bubble, everybody has their idea of a bubble. And how you interpret it. But if you look at a bubble as a situation where values get beyond the foundational fundamentals. And if you look at what's happened in the last few years, or even the last 18 months, I would say yes. We have definitely moved into a bubble stage.
What are those fundamentals? Commodity prices?
Absolutely, commodity prices and income levels that have been phenomenal for the last number of years, particularly for crop producers, but do not look likely to be forever the norm.
That's what your trepidation is then,
Yes.
just because it's high now.
Yeah.
What about the overall economy? Certainly that is, you could argue on either side of it right now, but there's nothing certain there.
No. And that's, Jeff, is precisely the issue. There's an awful lot of uncertainty. And so risk, I think the participants in the market are and many of them are very shrewd about this, but we do have to really factor in the risk card here. And at this point in time, I think there are some issues that saying, hey, we can certainly see a correction.
Does the final part play out here? Does it bust?
Well, that's what we say here is basically that's an interesting question. One reason that it probably won't be a total bust is because, quite differently from the 80s, we are not over-leveraged in agriculture. In general, we have some folks that are getting there, I'll tell you. But we're not burdened with debt. And so, the idea of farm foreclosures and share sales, that's not likely in rural Nebraska. That said, I think we actually do have a situation where it's time to catch your breath and begin to realize that the growth and the expectations of what we've experienced to just continue is not as likely to happen.
As Bruce wrote in a recent Cornhusker Economics article, a total agricultural land market meltdown seems remote, but this part of the country could realistically see a downward market correction of 30% or more in just a few short years. Drought conditions last summer may have dried up ponds and creeks, forcing farmers and ranchers to haul water to their cattle. UNL Extension forage specialist Bruce Anderson says it might be a good time to develop more wells or pipelines to reliably put water into tanks. Anderson says tank water may be cooler and offer easier access to cattle. He says because cattle stir up mud and deposit animal waste in creeks and ponds, tank water is often healthier and can quickly make up any installation cost.
Investing in tanks probably will actually pay for itself. Reports from Montana, Oregon, Canada, and elsewhere show that the higher water quality found in tanks provides a boost in cattle gains. Calves can weigh an extra 50 pounds at weaning when tank water is available instead of dirty ponds. Yearling steers can gain an extra 3 to 4 tenths of a pound per day. With this much added performance, pumping water out of ponds, creeks, or from wells and into tanks can pay off in just a few years. And if it's a question of having water or not having water, the payoff is even more immediate.
Anderson says pumping water in tanks usually improves grazing distribution and carrying capacity by attracting cattle to graze area near tanks instead of spending time standing in or around ponds and creeks. The February Nebraska Farmer says cover crops are becoming more acceptable by farmers in the state. The feature article in this month's issue says this is changing the conservation landscape of Nebraska. You'll see examples of cereal rye and waterways as a conservation practice, turnips grown as a forage crop, field peas that fix nitrogen, and radishes to improve water infiltration. USDA Natural Resources Conservation Service specialists say this cover crop expansion coincides with its emphasis on improving soil health. You can read more about the benefits of cover crops in the February Nebraska Farmer. In the latest Nebraska Agricultural Statistics Service report, the state's cattle and calves rated 75% good to excellent, with 5% of the cows calving since January 1st. We spoke with Rick Rasby Thursday about those cows yet to calve and how cattle producers have benefited with cows on uncovered stalks.
I think we've been blessed. It's been open this winter. The dry conditions in 2012, we didn't harvest very much hay. And it was expensive. At least we haven't had to feed much of it yet. And so we've really utilized corn stalks because it's been open.
And they've been open for a while. I mean, that was an early harvest this year.
Yes.
So when you look at how long they've been on the field or which fields they're going at, recommendations?
Yeah, you know, I would just have you think about, you know, if you have 150 bushel corn, because the amount of residue that's left out there is based on corn yield. And so, you know, if you had 150 bushel per acre corn, an acre of stock should last the cow 45 to 50 days. Sometimes when we get into open winters, just because it's open, one thinks that the nutrition that they're getting out there is okay. But, you know, they're selective grazers out there. They're going to select the husk and leaf followed by the cob and the stalk. And if there's any grain, that'll be even first. But just don't overgraze, because I think cows are really in good condition. Now, I'm not surprised, but we've got condition back on cows after this dry weather that we had this summer, and it's just important to go into calving season in good body condition for cows.
Have you had to do much supplementing, or do you foresee that you will?
You know, the thing is that if you've been able to rotate through stocks, we've not seen much of a response for cows grazing corn stalks, that being mature cows, in regards to supplementation. And so what that tells us is that if you go by our recommendations, which our recommendations would be based stocking rate and number of days based on husk and leaf out there. And so if you do that, you're probably not going to get a big response from supplementation. Now, if you had first calf heifers out there, that's probably another deal. You probably need to do some supplementation. But we really, I mean, we're coming into calving here. You know, we'll get a lot of cows to start calving into February, 1st of March, and we just have them in good body condition. Just keep them there. You
also have on that same note, you have a body condition score app that's available. What can that do for producers?
We do, and when you think about it's available. It's up on the iStore right now, and I think droids can get it as well. But when you think about body condition and management of the beef herd, body condition of your cow herd is a better indication of the nutrition program as compared to body weight. And so we can do that visually. We don't have to run cows through a chute and get a weight. And so it really is a way to monitor where you're at from a condition score standpoint. Of course, it's a good app, but it has a learning component to it as well. So if you're not real familiar with the 1 to 9 condition scoring system, you can actually learn a little bit about it and practice condition scoring cows before you go out and do your own.
As we get closer to calving time here, what records are you looking at? There may have to be some additional selling off if you know, conditions don't improve and pastures enter the way they left. Yeah,
you know, we talked to Jerry Valesky and Bruce Anderson. They're our range and forage specialists, and they say even if we get rain, we've got to give those pastures some time, and we may even, if we get rain, we may only need to go out with, or can go out with, maybe 70% of our cow herd. So maybe some records at calving time. If you do have to maybe sell a few before you go to grass, hopefully get rain to go to grass, but maybe keeping a few records like calf birth weight, maybe disposition, udder and teats scores and stuff like that. If you've identified them to be cold at calving time, that you were going to maybe sell them at weaning time, if you have to liquidate any cows or sell cows prior to going to grass, those may be the ones.
As Rick mentioned, the body condition score is available on the iTunes and Google Play stores. We'll also link to the Calculator worksheet for matching livestock size with corn stalk acres on the Market Journal website. Now with his weekly weather forecast, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. But before we get to the main forecast, let's take a look at what's happened during this last week. Of course, the big news was the storm system that moved out of the southern plains and then developed a pretty extensive area of severe weather across portions of eastern Kansas, Oklahoma, Texas, and all of that activity shifted slowly toward the east. Some very significant rainfall fell across some of the regions of Missouri, all the way up into the eastern Corn Belt, where it was very common to see anywhere from 1.5 inches to 2.5 inches of precipitation with some isolated 4-inch totals. For Nebraska, we did get enough energy in the system to develop some pretty significant snowfall across portions of east central and southeast Nebraska, with most areas reporting anywhere from 2 to upwards of 6 inches of snowfall, with the heaviest band from Lincoln all the way over to Nebraska City. Very welcome moisture. We're going to take a lot more of this before we can finally put an end to the drought considerations, at least for this upcoming growing season. Do we have any moisture in the forecast? Not really. looks like a general warming trend as we progress through this week, and that will be an abrupt change from the very bitter cold temperatures that have been around our state for the last couple of days. So let's take a look at the upper air models and see what we can have in store as we go through this next 7-day period, and I'll draw your attention to the upper air trough that is going to start lifting toward the northeast, and we're going to start to see the switch slowly build into our region. For eastern Nebraska, we may have a little difficulty with our temperatures the first couple of days as we melt that snowfall, so we may be looking at temperatures confined, especially in northeast Nebraska, into the 30s until we get rid of the snow, particularly to the south, and then we'll see temperatures warm up into the 50s. But overall, as we progress through this weekend, you're going to start to see this trough lifting out and this ridge moving into our region, bringing much warmer air. Nothing significant in terms of weather because most of the activity is going to remain to our north and east. As we get to Monday, what you'll notice is that all that activity is shifting well up into the northeast, very benign conditions across the center part of the country, and that continues into the day Tuesday as we see a very big ridge starting to build in and bring in some very warm temperatures to western Nebraska with the main activity primarily over the eastern Corn Belt. Now, as we get into Wednesday, we'll notice there's another system that's going to try and move its way from the northern plains. It's going to dive toward the Great Lakes. Some of that energy might brush northeastern Nebraska, but overall, we're not expecting any precipitation for the vast majority of the state. And we can see that on Wednesday as that system rapidly moves toward the Great Lakes, and we see a little bit of ridging behind it. Should bring a little boost in temperatures, but we'll also notice there's a big trough moving in the western United States that will have an impact on our weather in the out forecast. And by Friday, that is in the southwest, so we're going to see a southwesterly flow aloft, and that's going to bring considerably warmer temperatures back into the southern and central plains. In terms of the temperatures, across the northeast, we're looking at very cool temperatures with a gradual warm up as we get into the midweek. Now, this might be underdone in terms of the temperatures. If we get rid of the snow cover quicker, we'll add about 5 degrees of temperatures. The real warming is going to be out west, where we're going to easily be in the 50s, and for eastern and southern Nebraska, we'll be into the mid to upper 40s. Now, as we look to the 8 to 14-day forecast, takes us from next Thursday to the following Tuesday, it does show above normal temperatures. It depends on how quickly this storm system moves out, but as in terms of precipitation, I think we're going to be much more aggressive with precipitation, as all indications are a fairly significant storm will fall into late next weekend.
Thanks, Al. Our interviews from today with Jeff Peterson, Bruce Johnson, Rick Rasby, and our coverage from the Port of New Orleans are archived on the Market Journal website and YouTube page. Next week, Dan Steinkruger from the Nebraska Farm Service Agency will discuss FSA plans on farm program implementations under the Farm Bill extension, and we'll show you Nebraska soybean farmers' thoughts on their recent trip to New Orleans. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.